What's going on, traders? Welcome back to another video. So you're interested in trading penny stocks and you're asking yourself all the time, how am I going to find those really big running penny stocks? And in this video, I'm going to show you exactly the characteristics that you need to look for to have yourself find one of those penny stocks that's going to go running really big. In this video, we're going to look at the stock OPTT, and then we're going to look at FinViz, and I'm going to talk to you guys about those multiple characteristics that you need to have within a penny stock for it to go on a big run. And after you watch this video, you're now going to know all those simple characteristics that you need to look at that you can tell yourself, hey, this has an opportunity to become a big runner. Chances are nobody explains this to you on YouTube, and I'll be the first to do so for you. So if you can, please like, share, and subscribe to the video, because by the time you get done, you're going to know exactly how to find one of those big running penny stocks. Now, how you trade it, that's a different story. But in this video, we're going to show you exactly what you're looking for. So we're going to get right into the screen share. Here we are, the penny stock, OPTT, that went on an absolute massive run from $4 all the way to $16. These are the exact stocks that everyone's like, I wish I caught that, I wish I was trading that, etc., etc. So we're going to talk to you guys about all the things that need to be involved in this particular stock or particular penny stock to have a really good running day. Because all the time you're looking at penny stocks, right? And you're like, is it going to have a good day? Is it going to have a good day? Well, now you're going to know all the characteristics to look for in order to get one of these big moves. So for one, OPTT, from $4 to $16 in one day. Boy, what a day. Now I'm going to drag over FinViz. All right, so we're going to walk you guys through all the characteristics. So for one, when you're looking at a penny stock, obviously it's got to be cheap. I mean, regardless, if it's a penny stock, it's usually going to be below $5. All right. So for one, penny stock below $5. Number two, the penny stock you're looking at needs to have a low float. Remember that low float. That's probably number one most important. I really don't know what's most important as far as all of them, but regardless, one, most importantly, maybe you need to have a low float stock. What is low float? Low float is the supply, the amount of shares that can be bought by the open public. So if you're confused on what float is, after this video, go look up float. I've also done a video on it. So number one, very important, needs to have a low float, meaning low supply. So if you have a bunch of people trying to buy it, heavy demand, low supply, prices will go up. Simple economics right there. Simple understanding of supply and demand. So number one, low float. All right. Number two, the stock needs to have some type of news or what we would call a catalyst, a news-driven catalyst. So the stock needs to have some type of strong news or press release, usually on that day. Because if it has a strong news release, it's going to grab people's attention and people are going to start buying into that hype. So if you're looking at a penny stock and it has a low float, but there's no news on it that day, chances are nobody's paying attention to it and nobody's going to be trading it. You're looking at a dud. All right. So first, low float. Number two, needs to have strong news. Number three, this one is extremely important that most always every trader will overlook or doesn't even know this exists, and that's why they find themselves looking at penny stocks that are basically duds. Right here on the screen, I'm going to circle this, or maybe I'll put it in a red box, whatever looks best. Here we are, right here. Shares outstanding. You want a stock, if you're looking for a big runner like a penny stock, this needs to be low. That number needs to be low, like 1 million or even less than 1 million. It needs to have a low outstanding number of shares. To give you a simple understanding of this in background, when there is a low amount of outstanding shares, or let's reiterate that, if there's a high amount of outstanding shares, that usually means there's a lot of insiders that still have shares on that stock, and as soon as it pops up, they can start selling it or they will sell it. So if you have a lot of outstanding shares, that means there's a lot of insiders that still have shares on that stock that can dump it on the open market, which will dilute that stock. Have you ever seen a penny stock pop up and then it gets crushed? Chances are it has a lot of outstanding shares. Now, this is a simple way to look at it, but if you want to get to the nitty-gritty, you can pull up the company you're looking at. You can go into their financial reports, or shall I say, you can go into their 10Ks, 10Qs, and you can look through their financial reports and see how many outstanding shares there are. Are there any outstanding warrants, any convertible notes? If you don't know anything I just said, I would say research it and learn it. Maybe I'll do a video in the future on that. But for now, if you're confused after this, you need to go look that up. So you want to look for a stock with low outstanding shares. That means the likelihood that the stock is going to get very diluted is far less, okay? So number 3, I believe we're on number 3. Low outstanding number of shares basically means the stock cannot be dumped on or diluted, or there's not much dilution that could take place. Number 4, I think we're on number 4. I don't remember. I really can't count. So number 4, what's another important one? This one you don't necessarily have to have, but if it's there, even better. Right here, short float. A short float, a high short float. Anything over, really anything over 20% is a good high short float interest. So let's give you background. What is a high short float interest? Well, if you're long, you're not short. If you're short, you're not long. Get it? Basically, if you're short a stock, you're hoping it goes down. So if you were to take a short position on any stock because you think it's going to go down and then all of a sudden you're wrong and it starts to go up, in order for you to exit your short position, you have to buy shares in order to close out your position. So it's the opposite of being long a stock. If you're long bias or long on a stock, that means you purchased shares hoping they go higher so you can sell those shares. Reverse it. If you're short a stock, you actually sell shares first, and then to get out, you buy shares back. Now, for those of you that are newer, you're going, how can you sell shares first if you don't own shares? And how does it even, again, not here to explain that to you. Take some time to research it. But if there's a high short float interest, that means there's clearly a lot of people that are short that stock. And if they're short that stock and it starts to go up, they're going to have to do what? Cover or buy back those shares, which causes additional buying pressure to the stock that's already on top of the demand for whatever reason people are buying it, probably the news catalyst. So we're going to walk you through this. Penny stock, usually going to be below $5. Low float, meaning low supply, mix that in with a news catalyst. It's going to bring attention that brings in the demand. So again, penny stock below $5. Next thing, low float. If it's low float, means low supply. Look for a news catalyst on that stock. If the news catalyst is there, it's going to bring in attention, which brings in demand. So you're mixing demand with low supply. That's already setting you up for a good move. And then number 3, low outstanding shares. Even if the outstanding shares aren't low, the stock could still have a good day, but don't anticipate it to be a big, big supernova. This video is specifically to get you on track to understand when you might be on top of a supernova or big, big runner. Not your $1 move or $2 move. We're talking 10, 5, 6, 8, maybe 20, I don't know, maybe 150 like LFIN. Okay. Then number 4 is a high short interest, or the float of the stock is very heavily shorted. So short float is very high, which means you have a lot of short sellers in the stock that can get squeezed out. So let's take a look at the chart and kind of give you an idea of probably what happened. All right, so now we look at OPTT. Go back. So you can see from 5 up to 16. Let's go back on the chart. The thing had been trending down for long time, right? So if it's been trending down, basically people are doing what? They're shorting the stock because it's going down. It's been trending down for a long time. Chances are it's going to keep going that direction, right? So you got a bunch of people shorting it because the stock's going down, down, down. All right? Right? You're starting to understand. Now let's look at the resistance. So a bunch of people probably shorted that move right there. A bunch of people that were short biased probably had stop losses around this level, right? And then even more stop losses around that level. Granted, it didn't get over 16, but you're starting to see it. If I was a short seller and I shorted here, my stop loss would be somewhere in this area. If I was a short seller and I shorted here, my stop loss is going to be right around here. If I was a short seller and I shorted there, my stop loss will be in here. If I got short on this pop, right, and it goes down, my stop loss is probably going to be somewhere around there. So as this spikes up, gets over this level, short sellers get stopped out, squeeze the stock higher. Gets over this level, short sellers get stopped out, squeeze the stock higher. All right, so that's exactly what happened. You have all in this, right? So you have low supply. Okay, I'm typing it, I'm just writing this in terrible, but it's okay. Low supply. Mix that in with high demand, right? So now you have high demand. So something that there's not much of, but people want it a lot, okay? Then you have strong news. If you go look at the news tab down here, basically some pump news, but I don't know, what does it say? It said, ocean power technologies. Oh, that's bullshit right there. Keep going down. Where is it at? Where's it? It's the good stuff at 9 in the morning. Here we go. Ocean power technology wins contract with leading oil and gas operator. Yeah, well, I looked to find who the leading oil and gas operator was. Couldn't even find it. But if they're so great, you'd think you put the name in there. But anyways, I'm not one to judge. So you have low supply, high demand, strong news. Okay. And what else do you have? You have a high short float interest. So high short percent on that stock. And then you have the low OST for outstanding shares. Those are all the characteristics that you're looking for to find one of these big stocks. So now your search for the endless secret is over. For all you beginners out there, how do you find the penny stocks that are going to run like crazy? Your search is over. Connor Polford and Boiler Room Trading has fixed that. That is all I ask for you, is a like, share, and subscribe the video to every social media platform there is, so that hopefully this video gets a lot of views and grows my channel, because I just showed you literally all the secrets and all the characteristics and all the stars that need to align so that you can find yourself one of these big, big movers. Hope you guys liked the video. Hope that clears things up for you. And as always, would love to hear what you guys have to say in the comment section below. With that being said, thanks again for tuning in, and I will see you guys on the next video.